Good morning, everybody. How's it going? Welcome to today's episode of Stock Trading Pro. In today's Stock Market Live, we're going to take a look at Tesla charts. We're going to take a look at the daily charts of Tesla stock. But more importantly, we're going to cover two of my favorite chart patterns. One is known as the Bullish U-turn, and one is known as the Bullish Echo. We got a lot to cover today. We're going to talk about that rally in the stock market yesterday afternoon and why the stock was supposed to go down. The market was supposed to go down. But the stock market found buyers again yesterday afternoon, and we're up again this morning. I can virtually guarantee you there's a lot of people watching this video right now that are frustrated out of their mind, feeling like the market should be going down with all of the stuff that's going on in the world. Just go to lunch. We went to lunch yesterday. It's like $40 for soup and a sandwich, which is absolutely crazy. Inflation's through the roof. There's a war, everything else going on, interest rates going up, and the market's still not going down. The stock market is very resilient right now, and that's why we do tape reading. That's actually what we're going to talk about today. We have order flow, tape reading, and risk reversal as the core parts of what we do. Today, we're going to spend a little bit of time talking about tape reading and whether or not this was an easy or difficult week of trading. Something that you probably don't know how to do, and this is probably most people are trading at home by themselves. You don't know whether something's a good week or a tough week or a good day or a bad day, and whether or not you made money or lose money and whether that was good or not. And I'm going to give you a quick example. We had members on our trading floor when I had my office in New York City, and somebody would be like, yeah, this is a great day. I made $500, but they didn't have enough context yet to understand that when you were buying stocks that day, it should have been a day you made $5,000. That kind of context, understanding when to step up, is a big part of trading and a big part of experience, quite honestly. But the opposite part of that is just as valid, which I think applies to this week in a big way, where maybe you lost a couple of $100 or let's say $1,000 for the week, whatever it happens to be. And you're like, oh, that's horrible. But what if I told you it was a really challenging week and losing a little bit of money was actually okay if you took all good ideas simply because we didn't get follow through? These are the little kinds of things that you don't know until you're around a community like we're doing right now and having these kinds of conversations. We're actually going to talk about today. I'm going to show you the coaching call that we had last night. I want to show you the topics that we talk about because we have weekly coaching calls. Sometimes we have 3 per week, depending on what membership you happen to be in our community. Last night's coaching call was 2 hours and 18 minutes. I know John Odoran was on that call last night with us as well. Again, it's Friday. I want to give you the topics that we discussed to help you up-level your thinking, especially heading into the weekends, reviewing some of those topics. And I guarantee you that there's going to be something in there that you didn't consider, or maybe you're going to just look at in a different perspective. So we're going to start out with looking at Tesla stock and the bullish U-turn. We're going to talk about a bullish echo, and then we're going to get into the coaching calls and some of the list of the other best stocks to buy now that I'm looking at for today. Just want to make sure I say hello to Luis Diaz. Luis, how are you? Good morning, pal. I got your email yesterday. I'll get back to you as soon as I can. Okay. So stick around. I'll be back in just 1 second. Okay, so thank you so much, everybody. Obviously, we're talking about here today, everything is for educational purposes. I'm going to give you a quick tease first. I'm going to show you what was in that email from this morning, which is what we talked about on our boot camp coaching call last night. So we're going to talk about this, a little bit about tape reading and why we specialize in tape reading. But again, when I pull these things up on the screen, I want you to either screenshot it or come back and watch the video and take notes on it again. So I'm going to pull this up right now. You can see last night's call was 2 hours and 18 minutes. So there's a bunch of topics in here. We even got into setting up your monitors, but the one that I want to get into that I think everybody can relate to is this one right here. How to bounce back when you're in a trading slump. That's actually a really big topic that I think all of us at some point in our trading careers, we're buying stocks, selling stocks, and all of a sudden you're out of the groove and you don't know whether or not it's a tough market or if you're just not reading the market correctly. So stock trading could definitely mess with your mind. We had a lot of psychological type questions last night. I choose not to usually use the word psychology. I like to use the word mindset because I think it's a little bit less esoteric. It's really more actionable. When we say mindset, it's like get your mindset right. And I will tell you this, winning traders think differently than people that are struggling. And that was actually another big part of our coaching call last night, which is the context around losing trades and why if last trade lost money, why that really doesn't matter in the big picture. It's the big picture of things, of the totality of your edge over a large sample size of trades. That is what professional traders think. Unprofitable traders who are frustrated out of their mind when a trade doesn't make money, that just means that they don't understand the difference between the short-term result of one trade and the big picture objective, which is making money after you place a whole bunch of trades over time. And that is really, I hate to use the word secret, but it's absolutely the secret that a lot of traders just really never learn, quite honestly. I see Scott Henderson is here with us today. Good morning, Scott. How's it going? So we're going to hop on right over to Tesla. We're going to talk about two different types of trades. We're going to talk about a bullish U-turn and a bullish echo. Now, what's interesting about these is one of them is a reversal pattern, and one of them is a pattern that tells you the difference between a swing trade and a day trade. Because we always get this question all the time, and probably, like I say, the biggest challenge that new members have is buying at the wrong time. And typically buying at the wrong time means that they're buying stocks too late. Hopefully, you've been watching these videos every day. We've been giving you the best stocks to buy now each day. The biggest thing I hope is that you paid attention to the conversations that we've had around healthcare stocks this week. You know that one of the biggest things that we do every day is we start out with sector rotation. And when we dive into the sector rotation, we've been talking about it on a daily basis, how healthcare has been working its way up the list and just on fire the whole week. So hopefully you've been on top of the healthcare stocks, and we're actually going to use a couple of groups of healthcare stocks to take a look at today. But we're going to use Tesla stock to look at the bullish U-turn today, and we're going to look at Walmart stock to look at a bullish echo today. So we're going to cover a lot of stuff today. If we happen to go over it quick during the stock market live, I'd strongly recommend that you go back and watch the video and take notes, because we're going to talk about a reversal pattern and a too late to buy pattern, too late to put on a new swing trade. But also, if you are new to the channel, please do me a favor, hit that subscribe button for updates. Tomorrow, I'm going to come out with a sector rotation for the entire week and what we're looking at for next week. So you want to make sure that you're aware for those updates. So make sure you hit that subscribe button. Okay. So we're going to jump right on over into Tesla. And I want to pull up the 50-period moving average on the chart, because that's usually the big line in the sand that we watch. So Tesla stock and the pattern that we looked at yesterday. Now, I want to be clear about what we're talking about right now. Everything first starts out with order flow. So if we go over to the email that I just showed you before, it's really this part right here. So obviously what we do is New York method. We developed it in New York City. Order flow is first. Tape reading is second, and risk reversal is the last part. Risk reversal has to do with entries, exits, timing, and all that kind of stuff. Tape reading is something we're going to take a look at when we look at the stock market in just a couple of minutes, and whether or not you're on the right side of the market, because a lot of people are frustrated that the market should have gone down, didn't go down, especially after the gap. But I want to talk about order flow here in the context of Tesla. The order flow in Tesla, as you know, we start out and we look at order flow throughout different time frames. So how much buying happened during the month? How much buying is happening this month? How much buying is happening this week? How much buying has happened over the last couple of weeks? And then how much buying happened yesterday? So we had a good question yesterday as well about confidence. How do I have more confidence to put the trade on? Well, first I'll tell you how, and we're going to relate this to Tesla. I'm going to tell you how to have a lack of confidence, where you might feel really smart that you know everything, but you still hesitate when it comes time to put that buy button out there and hit that thing. You believe that you need confidence in that next trade working. And that's why you lack confidence, because you judge your confidence based on whether the last trade made money or not. That's wrong. That is completely wrong. And I'm saying that with that much emphasis. I'm bringing my New York Italian out right now to make sure that we make this statement, that you are mistakenly having confidence because your last trade made money, or mistakenly lacking confidence because your last trade lost money. Confidence comes from your edge. Your edge literally means most of the time it should follow through. So that also means sometimes it won't. So confidence comes from the edge over a large sample size of trades, meaning you believe your edge works. You believe your edge is valid. And that's where confidence comes from in trading. but first you need the edge. So obviously our edge is order flow, tape reading, and risk reversal. So when I put on a new trade, members of our community put on a new trade, we have confidence in the edge, but not necessarily confidence that every trade we make is going to follow through. That's some pretty deep stuff, but I'm not afraid to get into that with you. I've never met most of the people here. That's fine. But I want to teach you. I want to elevate the way you're thinking, that if your last trade made or lost money, that is not where confidence comes from. It comes from believing, hopefully with a track record, that what you're looking at works and makes money over a large sample of trades. So you really need to think about where trading confidence comes from. And that's also going to make you take a trade or take a loss or take a profit with absolute conviction and confidence, because it's not that one trade that matters. It's see the trade, put it on, see the trade, manage it, see the trade, manage it. That's where trading confidence comes from. So if you're smart, working your tail off, but don't have confidence, is because your focus on confidence is in the wrong place. You should be looking at the results of your trade over time, which actually expectation ratios was also something that we talked about last night, which is how much money do you make or lose per trade over time. And that gives you a ratio of how much you can expect. So every time you place a trade, you'll know that over time, I make X on my trades. Some of them are losers, some of them are winners. Some of them I make 3-to-1, 4-to-1, 10-to-1. Some of them I lose one. But over time, that gives you the confidence. So again, if I told you you're going to make 100 trades over the next, I'll just use an example. You're going to make 100 trades over the next 100 days. You're more focused on, okay, if I do what I'm supposed to over those 100 trades, I'm going to get paid. That is where the shift in confidence comes from. It's not about each trade. It's about doing flawless trading on each trade, but the results and the confidence come over the sample size. That is so critical. You want to watch this again. Your confidence will shake in a heartbeat. That's how fast your confidence can skyrocket, because it's not about the one trade. I can't express that strongly enough. I'm getting pumped up about it. So we're going to tie that back into Tesla. It's about order flow and a reversal. So if this Tesla bullish U-turn follows through and reverses to the upside, and this is important because I get misquoted on this a lot, we're looking for a buy stop above yesterday's high. If Tesla opens lower and trades down, we're never getting into the trade. It needs to do what we expected it to do. So if it does do what we expected it to do and it goes up, we now have the mindset that, okay, I understand the expectation for follow through. I believe in my edge over time. If Tesla follows through, great. I will look for the trade. If it doesn't follow through and I get in and it goes down, that's a part of the 100 trades over the next 100 days. Maybe we'll do a challenge, 100 trades in 100 days. Maybe we'll do something like that. Maybe we'll bring it down 14 trades in 14 days, maybe something like that to bring it down a little bit tighter. So the bullish U-turn, I'm going to verbally walk you through it first, and then we're going to go into the bullish echo, and we're going to look at Walmart to look at a bullish echo. A bullish U-turn is a stock that exhibits bullish order flow. So that's the bullish part of it first. So again, it's two pieces, bullish U-turn. So the bullish part means order flow. The U-turn part of it means a momentum reversal on one daily candlestick. It's a reversal back in the direction of order flow. So you want to write this down. Bullish order flow, bullish U-turn. Okay. So in Tesla here, this is the bullish order flow that we're trading. It's basically still 4 weeks of bullish order flow. We broke out, pulled back. Now this candlestick here, the bullish U-turn, this candle here, in the context of this bullish order flow, that's the most important part, okay? This candle yesterday traded below yesterday. So here's yesterday's low, 2 days ago. Traded below that, reversed back up, closed above the previous low, and closed above the open. That's the important part of the trade. So it's two pieces. It's not one, it's two. I can't express this strongly enough, so I can give you this. This is actually what the bullish U-turn looks like. So again, there's a lot of things that I want to make sure you screenshot. You can screenshot this. This is one of my proprietary setups. So again, you can see it here. This is the visualization that you want to have. But the important part here is the bullish and the U-turn are two different parts of it. Bullish order flow, bullish U-turn. So you can imagine it's going down, going down, going down. Then this day trades below that candle, reverses, and you can see the reversal here. That's why we called it a U-turn. Trades back above that candle, closes above the open, which is why it's green, and closes above the previous low. That's the bullish U-turn. So what is the trade here? Now, we want to put this in context. It's a momentum reversal back in the direction of the bullish order flow. So here's the part that I want to get across. Most traders, and it's funny, I actually wrote this down in my own trading notes yesterday about 5-minute charts. Most traders look at the shorter time frame first. That's a mistake. Do not look at your entry time frame first. You need to first determine, is something obvious first? Then how do we piggyback on that order flow? So I'm saying this over and over again because you're going to make the mistake by only looking for the entry, because the pattern's kind of cool to notice, but the pattern only matters in the context of, is there bullish order flow first? So again, the entry for bullish order flow is above the high of the bullish order flow candlestick. The stop loss is below the low. So we're just going to map that out here. We're going to use these candlestick things here. So there is the high and there is the low. Now, you buy just slightly above the high. You don't put it at exactly the same number, and your stop loss is just below it. If you put it at the exact number and the exact number, the odds of getting hit are pretty darn good. Okay, the odds of getting pretty darn good. So you want it just outside those levels. So yesterday's candlestick in Tesla, 176 to 54. It's roughly $22. So now we have to calculate the actual profit target and whether or not it's worth putting the trade on and whether or not it's realistic. So this is where now we use what the trade actually normally does for Tesla and justify the risk reward. So remember, we talked about expectancy ratios before. So we went through the bullish order flow. It's also above the 50-period moving average, which is a intermediate term trend, if you know Dow theory, which hopefully you do. And then it reversed yesterday. So now we know there's $22 of risk based on yesterday's candlestick in Tesla. So now we're going to take it a step further, and we're going to take a look and see what Tesla normally does to see what the risk reward is on this trade and whether or not it is realistic. Okay. All right. So now we're going to go into Finviz and we're going to pull up Tesla. When we pull up Tesla, we're going to scroll down a little bit and we're going to go over here and we're going to take a look at average true range. So the average true range is what the stock normally does from the low to the high on a daily basis, and it's roughly $50. So yeah, Lewis, that's actually correct. It's roughly $50. So what does that mean? Well, if we have $22 risk on yesterday's bullish U-turn candlestick, and the stock normally does 50 from low to high on a typical day, that means that the stock would need to move 3 days higher based on what it normally does to accept the risk for yesterday's bullish candlestick. So do we believe that Tesla, if it reverses back up in the direction of the order flow, can go up for at least 3 days to justify accepting the risk? Now think about what we said. We're not setting price targets to the moon. We're just saying if we want to accept risk on this trade, which goes back to what I said before about all of the trades matter, not just the one trade. Should we accept the risk? Are we comfortable with accepting the $22 risk in exchange for what it's likely going to do if it rallies? And we just brought that all the way down to, can the stock go up $66 over the next 3 days? Well, the stock normally moves 50 in 1 day based on the average true range. And again, we got that reading from Finviz going into Tesla and pulling up what it does on a normal basis. So I think we can all agree that's realistic. That's not a pie in the sky number, but before we hit that buy button, we need to justify the risk by making a distinction that is my initial profit target likely. So now we're looking at $66 from yesterday's high, and we have to see whether or not that's realistic for 3-to-1 risk reward. We could lower that down to a 2-to-1 risk reward based on the fact that the market's trading kind of choppy and sideways, but then we'd need to dive a little bit deeper into the industry group to see how other stocks are doing, and can we amplify our expectation for hitting the target. So the first thing we're going to do is go over to the daily chart in Tesla, and we would basically map out $60 from yesterday's high. So let's say we're looking at 1,081. That would bring us up to 1,140. So somewhere in this area would end up being the $60 target to justify the risk on a new swing trade. So again, Simon, we're not talking about swing trading versus day trading. This is just mapping out a trade for a swing trade. We're measuring a swing trade because we're using yesterday's daily candlestick. If we were talking about a day trade, then we would be using intraday charts, which we're not doing right now. So I want to be clear. We're talking about swing trading, not day trading. Day trading Tesla would be a whole other conversation. So if we go back to the charts and we take a look at where Tesla recently stopped, do we think it's reasonable that Tesla will go back up to a level that it's hit once, twice, 3 times, 4 times in the last couple of months, and only needs to go, actually, I'm sorry, what the chart wasn't up, once, twice, 3 times, 4 times, 5 times in the last couple of months, and actually exceeded it. We're not looking for it to make new all-time highs. We're just looking for it to go from here to justify the risk here. Now, if all that is new to you, that's very interesting, because this is really what you're supposed to do before you place any trade. You're supposed to say, is order flow obvious? Is it reversing or already going in the direction I want to go? How much risk is necessary on this trade to allow the stock to fluctuate? And what is a realistic target before I choose to accept that risk? And this is where I say a lot of traders make the mistake of going down to their shorter time frame, their timing time frame first, and it's a mistake because when you do that, you're only looking for entry prices, but you're not factoring in what's the likelihood of me making a profit in exchange for the risk that I need to take. So let me ask you a question. How scared would you be to place a trade if you knew, based on the work that we're doing, and new is relative? Remember, if you have a good likelihood of that stock moving in your favor because you stacked the order flow, if you understood how to build that argument the way that we just gave you a little bit of a lesson on that, if you understand how to build arguments that have a high likelihood of moving, would you ever be afraid to buy stock? The answer is no. The market doesn't become overwhelming anymore because you know what you're doing. It's when you don't know what you're looking for that you're scared. It's when you don't know what it's supposed to look like that you hesitate. Everything changes when you know what you're looking for. Now, let's put that in context. Does that mean that Tesla is definitely going to go up and make a profit? Hell no. I just explained that at the beginning of today's call. It's a trade that meets the criteria. So for everybody that's typing right now, but it might go down, of course there's a chance that will happen. That means you don't understand what it means to have an edge. An edge means most of the time. It does not mean all of the time. I am telling you, the sooner you wrap your head around that, acknowledge it, and trade with that in mind, you won't be typing in here, but what if it goes down? Of course there's a possibility that it will go down. Anybody who tells you they're definitely going to make money is wrong. There's no other way to put it. So whether you're watching this now or watching this on a replay later, I am telling you, we built an argument for an idea. We justified the risk. We set the target that justifies the risk. We put all the reasons in there of why we think it could go up, but that doesn't mean it's 100% going to. And as I said at the beginning of the call, it doesn't have to on a bigger picture basis. One trade does not matter. All of those trades combined, that is where trading confidence comes from. And that's where you have something special, because you no longer are judging your confidence based on one trade. So everybody that's typing in right now, but what if it goes down? You missed the entire point of this video. Watch the whole video again. So that's the trade with a bullish U-turn in Tesla. If it goes up, hits the buy stop, that's the entry. If it hits the target, great. We'll shift over to profit maximizer. If it hits the buy stop, reverses and comes down, we act like pros and we take the loss and we go to the next trade. It's confidence in the big picture edge, not whether each trade works out. So again, that's the Tesla trade. Now we're going to look over at the bullish echo trade, and that means we're going to take a look at something different. We're going to take a look at Walmart. Okay, you can see how far Walmart has now gone. So everything that we're looking to do in a trade, Tesla, we were looking for it to follow through. Walmart at this point, there's a very clear distinction between, is a stock obvious? And if you take a look at the technical analysis and the chart of Walmart, it's clearly obvious. It's broken through some big levels. It exploded through there. Volume is still pretty darn good during this move. So Walmart right now, it's not a question of whether or not the stock is obvious. It's a question of whether or not, if you're looking to put on a new swing trade, is now a good time to buy Walmart stock. So the first thing we're going to talk about is the optimal entry and how the optimal entry plays into whether or not initiating a new swing trade right now is valid. So if we go back to the Tesla stock and the Tesla trade, we justified the risk because the risk was acceptable for the potential reward. The likelihood of going higher based on the fact that's the first day the stock is reversing. Walmart is a different situation. Walmart is clearly obvious, but based on what the stock typically does in bullish moves, it's well beyond what we would call the optimal entry. So if we take a look at this picture, if this is what Walmart normally does, and it's all the way up here, well, even past the $7 profit potential, if it normally does 15 and it's already gone 15, then today is not a good moment to put on a new swing trade in Walmart. So this is a situation that we call a bullish echo. So if it normally goes 15 and the last bullish move was 15, that's not a good spot because now the risk is not worth the reward because the reward potential has diminished because it already just did it. So that means for a new swing trade in Walmart, we'd need to look for the next pause. And that next pause would look something like this, where we actually pushed up, paused, and then rallied. So a bullish echo is a stock that is obviously bullish, obviously going up, but too far from the optimal entry. So that means that now we would be looking to day trade that stock, but not put on a new swing trade. The next swing trade in that stock would be a couple of days pausing on the daily chart before it went up. So now the obvious question is, okay, so we're not looking for it to go much further higher. How do I know if it's still valid for a day trade as well? And I'm going to give you that super quick. This is a part of tape reading, okay? So if we drop down to shorter time frames in Walmart, and let me get this guy off the screen right here, the simplest way to identify whether or not a stock is still valid is the opening price for that day. Now, that opening price is going to be the same as saying the daily candlestick is green. So if we look at the previous 2 days of price action in Walmart and how strong it's been, that's the opening price on Wednesday right there. And that's the opening price on Thursday yesterday. So for the first part of the day, it was still strong. This little pocket of opportunity went below, so you're not doing anything. And then the rest of the day were opportunities to be a buyer of Walmart. So now because Walmart's in a bullish echo, now we're going down to the micro timeframes for day trading. Somebody asked about swing trading versus day trading before. Now we're talking about day trading Walmart, but not swing trading Walmart until it pulls back. Is that a lot? No, you need to learn how to run your trading business. Remember, we talk about this a lot. If you're watching this video right now, first, I want you to know how grateful I am. And again, if you haven't done so, please hit subscribe. And if you're giving you value, please hit that like button. But here's the thing. You hired yourself as a money manager. You're watching this right now because you are a money manager of your capital. Ask yourself right now, how knowledgeable you are right now about accepting risk. How knowledgeable are you right now about putting together ideas where there's a good chance, not every chance, good chance that it's going to move in the direction you want. We talked about that in Tesla. We broke down Tesla. We've been giving you the healthcare stocks for the week. Now we just broke it down into Walmart, where you might have a really good idea that that stock is strong. And again, when we're talking about strong, how far it's gone, but the likelihood of it following through based on where it is from the bullish echo is smaller for a swing trade. So we've shifted Walmart from a good swing trade the last 7 to 10 days to a pretty valid day trade today if it meets that criteria. I really hope this kind of stuff is inspiring you to say, wow, I know what I'm looking at. I just need to learn how to use it a little bit better. So what I want to do now is I want to shift over into last night's boot camp coaching call. And I want to leave you with this today because I want you to see the topics that we talked about, take a screenshot of this, and hopefully over the weekend, it will inspire you to become a better money manager of your own capital and ask better questions and structure your trading better before you hit that buy button. Okay, so I'm going to walk you through this one more time, yesterday's coaching call, and you could definitely take a screenshot of this here. Okay, so we're actually going to go down. So we just talked a lot about tape reading and that kind of stuff, but here's the coaching call from last night. Okay, a lot of good questions last night. Again, winning trades, how long should you hold them? This was a big question last night as well. How many stocks should a new trader manage? Again, one of the things we talked about last night, whether you're a brand new trader or just getting started trading less than a year, generally speaking, I would suggest anywhere between 3 and 10 stocks are the stocks that you create a list for. You look for those stocks, and every single day you take a look and you say, okay, out of those 10, I'm going to put those into my watch list. Now, generally speaking, you'd be like, oh my God, 10's a lot. Not really, because after the market opens or after the week opens, then you make a determine which of those 10 are doing what I want them to do right now. Typically speaking, maybe 3 will do exactly what you want, and then you focus on those 3 and you go over to the only those 3 and you leave the 7 alone. I do want to touch on one thing before I come back to this. I want to touch on the market this week because we got a lot of questions this week about how the market has traded this week, and we want to bring this in from a perspective of the weekly chart because we spend a lot of time on that. And right there is where the market opened for the week. And this is actually how the market traded this week. It went up, it went down, it gapped down, and it went up again. So I just want to give you some context. If, again, we'll get back to confidence. If you've lost your confidence a little bit this week because the market's been challenging, well, I'm telling you, the market, other than healthcare stocks, which have been off to the races this week, J&J, Pfizer had an amazing, amazing day yesterday. ABBV, Eli Lilly, LLY, those stocks have been on fire. I think ABBV I just mentioned as well. This week, the bigger picture in the market, and you can see this here again one more time, has been less than perfect. We opened here, traded down, went up, traded down, gapped down, went up again. It's not been an easy week in the market. So if you lost a little bit of money this week, if you lost a little bit of confidence this week, regroup. If you had small losses this week, that's fine. It was not the easiest week to trade. If you kept your losses small, I think it was Wednesday when the market was kind of just chopping around after that gap down day, we just kind of going sideways most of the day. I spent most of the day in our Discord community telling everybody, don't trade. It's not obvious right now. Lower your share size. If you're going to put on any trades, we're going to trade for cash flow because it wasn't perfect. So I'm just telling you as a friend, if you found this week challenging, you weren't alone. Have a nice relaxing weekend and come back next week with renewed confidence. And I'm going to show you all of these again so you can take notes right here. Okay, so here's some of the topics. You might want to take a screenshot of this so you can actually hopefully help you over the weekend to come up with some new knowledge. So again, this is what we talked about here about confidence, how to be prepared for the opening bell. Ask yourself, are you prepared before the market opens, or when the market opens, do you start looking for new ideas? That's not prepared. Big conversation last night, how to stop being scared to give back profits. Raise your hand if you get into trades and you're afraid to give back money. Obviously, we had a big conversation last night about short selling. There's a lot of money to be short selling right now. We just talked about expectancy ratio. So hopefully you get an idea here. We just talked about bullish U-turns. Okay. But the biggest thing I want to talk about here, how to bounce back when you're in a trading slump. That was easily one of the biggest things that we talked about last night. That was a really big topic. And I want to leave you with this. I just talked about the fact that this week has been a little bit less than obvious, a little bit more challenging. You had to really do your game planning and dig in to find the best stocks to buy now. And obviously this week we found that to be the healthcare stocks by a mile. Okay. If you're in a trading slump right now, the single biggest thing you can do is stop watching, and I'm saying this with a smile, stop watching thousands of YouTube videos trying to find different trading strategies. Pick one and stick with it. Once you have that one strategy, dial down the amount of setups you're looking for, dial down the amount of stocks you're looking for, create a game plan for only those stocks and only that strategy. And I'm confident that your confidence will come back pretty quickly because you're not trying to do everything. You're trying to do one thing really well. Now, the thought process comes in that, well, if I do less, I'm going to limit my opportunities. That's absolute garbage. What happens when you focus is you master something and you understand when to trade bigger. You understand when to hold longer, and you understand when to do nothing. So I'm going to leave you with this. When you know what you're looking for, you're not lost anymore. If you have a lack of confidence right now, and if you're pretty smart and working hard, I'll bet that you're looking at too much. I'm willing to bet anything that you're looking at too much. I'm going to leave you with that. Take that screenshot, rewatch this video. Have an awesome, awesome day. Have a great weekend, and I'll speak to you soon. Thank you so much, everybody. I really appreciate you being here with me.